Hello and welcome to the weekly outlook by Adam Woods. We're going to start by going straight over to the charts and looking at the New Zealand dollar, US dollar. We have actually got an alert out on Sunday evening as the markets open there, the retail sales quarter on quarter. It is expected to come in slightly lighter than the previous data point. But let's just have a quick look at the New Zealand dollar and just see what we can see on the chart here, because we did have this inverted head and shoulders pattern, which had the breakout there from the neckline. Obviously, this is a pattern that suggests a reversal in the trend, and the trend being on the downside for some time. We did have that bearish pennant pattern there, which broke out as well. It did rise up and then it fell back down. So at the moment, we've still got the RBNZ trying to talk this down to 65 cents to the dollar. As you can see, at the moment we're at 79, so it's got quite a way to fall before it reaches that Goldilocks price that they want to have at the moment. So the retail sales figure expected to come in slightly softer, hoping that it's going to push this New Zealand dollar down again. Obviously, we're still in some trades on this that we've taken from last week, so we're looking for this to come back, to push those back into profit that we took on the way back up here on this leg here. Okay, so the retail sales figure coming out and the core retail sales figure quarter on quarter both expected to be lighter as the market opens on Sunday. So we're going to be looking at that and hoping that we get that pushed down. This green leg up here on Friday was from the profit taking on the US dollar. So that was consistent with across most of the major currency pairs after we had a push down of good retail sales from the US dollar. So there's no reason fundamentally why this New Zealand dollar US dollar shouldn't continue down. The weakening commodity prices has also helped these currencies over that side of the world push up a little bit further. But how long that can last with the fundamentals talking and pushing them down is to be seen. So entry prices where it is at the moment, we could take additional sell positions at 7.9 and thereabouts, or on spike ups on that market open. But obviously, it may be a case where the figures are released before the actual market comes to light on the chart. So we could get a bit of a gapping. So we just have to probably wait and see what happens with that one, and then act accordingly afterwards. Okay, so moving through to Monday, we've got ECB President Draghi speaks at 2 p.m. So let's look at the euro as a whole for the week. Now, quite interestingly, we had the drop below the 125 level, which looked like it was going to hold us as resistance last week, with these pushes up to that level and back down. In fact, had quite a few decent sell positions off of that price. We did get that breakthrough again on Friday. Again, this is through to the profit taking on the US dollar after the US dollar index reached that 4-year high. I don't expect this to rally much further. I did write in the analysis last week that a rally possible to 125 to 125.20. Okay, so we've just broken through that level, and it's been pushed back down to that 1520 level. So kind of important, if this 1520 holds as support, then we could possibly see further upside. But what I'm expecting to see from Mario Draghi is, again, more hints on further QE in December, even though we've had a little bit more decent data come out on Friday on the Eurozone. We need to see a string of good data coming out. So I'm still expecting the downside to take hold of the euro and for it to drop much further down to 122 and 121 and even 12 in the mid to long term. So still looking for downside positions. What we've got to take into consideration here is where these support and resistance levels are. These are the key points that we want to be looking to get into these trades, and you can see there where we had that strong resistance, which banged up to that last previous data announcement, which was quite key, which came down to the 125 level, and then it took some time before it broke through. It rose back up again, but then did eventually come down. Similar sort of situation, if we are going to get this sort of pattern happening again, where we do get a bit of a bit of a rally on the euro. It's going to be limited, and it's probably going to be limited a little bit lower to where it was the last time being 129. So, I don't think we're going to be expecting to see prices any higher than 126. At the very most, maybe 127. Okay, so looking for sell positions all the way between now and then. So that's the euro. Other data coming out on the euro, we've got the German ZEW economic sentiment. Now this is actually supposed to increase for the first time for a while, so it'll be interesting to see what figure that comes in on Tuesday. But apart from that, it's all sort of medium figures until we get to the French flash manufacturing PMI. This also expected to come in slightly better. We are getting a little bit better data coming through from France at the moment, and the German flash manufacturing PMI as well on Thursday at 8:30. Again, slightly better. So we've got the ECB President Draghi speaking at the beginning of the week, from which I'm looking to get that push down, and then we've got him speaking again on Friday as well. So it's going to be quite an interesting week for the euro. I am looking for that bearish trend to continue, but I think it's not going to be as dramatic as what we've seen over the last few data announcements. I think it's probably going to be a little bit more of a drifting scenario, and maybe with some, as the US data comes in, we get a little bit more of a spike on those actions, such as the unemployment claims on Thursday and the core CPI as well from the US. Okay, so let's move through to the pound next week. Okay, so the two major data points we want to be looking at the pound next week is Tuesday, which is CPI year on year. Analysts not expecting that to change, coming in at 1.2. We know the CPI, the inflation, has been the reason for the big drop in the pound recently. It's fallen from 1.9 down to 1.2 over this year. We have got the Wednesday, which is more the data points more to consider, is the MPC official bank rate vote and the MPC asset purchase facility. Now the bank rate vote is the most interesting one because the last two times the vote decision has come in split 207. So two members, which have been McCafferty and weekl, have been voting for a rate hike earlier rather than later. It will be interesting after this poor inflation, the drop in inflation, on whether that falls back to 0.009. If it doesn't and it stays at 207, we could well see a bit of a rally on the pound next week, possibly back up to that 1.6 area as it starts to correct itself. Don't forget, if we look at the bigger time frames on the pound, we're still we've pulled back, and we pulled back through that 61% level at 15723 on the weekly chart. But there's still, this on the bigger perspective, even though we spiked down a couple of hundred pips from there, if this could quite easily retrace, open up another green candle, and then once that pattern's completed, it wouldn't really look much different to just a 61% pullback. So we've got to bear that in mind. We've got to look at the data to see if that is a possibility. We had some good positions on the sell on this last week with a good few hundred pips, but we were previously, prior to that, looking to take buy positions on the pound all the way. So, data reliant and the fact that the MPC rate vote next week really could change things considerably if that data comes in. But we need to see inflation start to increase on the pound, and with the weakening oil prices, it's not looking likely that it's going to happen anytime soon. So if that vote comes in split and the data remains to be poor over the coming weeks, then we could just see it start to fizzle out around about this price and start to consolidate between 1.55 and 1.16. Not really expecting big pushes down to 1.5 at the moment, unless that vote comes in at 0.009. If McCafferty and weekl have managed to convince themselves to go back to keeping a unanimous decision to keep interest rate hikes the same, or interest rates the same, then we possibly could see the pound drop down to 1.5 area. Okay, so we're really looking for Wednesday for answers for the direction of the pound at the moment, and until then, I think it might be a little bit difficult just to take random positions. However, the CPI data on Tuesday, if that falls any further from 1.2, then I think that will push the pound down a little bit further. And there has been some analysts anticipating a below 1% inflation rate for next year. So bearing that in mind, I think we've got to consider the fact that this bank rate vote could well fall back to 0.009. Okay, and we could see some further downside. But we've got to keep open-minded for both sides of the coin there. But at the moment, I think taking sell positions based on what we assume will happen with the MPC vote, we could just take small lot sizes at 157 just to get in there in case the scenario plays out to the downside as we expect. I think if it breaks 157.50, then we're starting to get, that's going to show that we're starting to get sentiment in the market that possibly the pound is slightly undervalued for the fact that interest rate hikes could still come in June, July next year. Okay, let's look at the Aussie dollar, US dollar. Same sort of situation with the New Zealand dollar here. The cheap commodity prices have started to cause these commodity involved currencies to rally slightly, which is why we've had things like the Aussie dollar, US dollar, and the New Zealand dollar push up against the dollar, even though some of the other majors have been falling against them quite rapidly. We've got the monetary policy out from the Aussie dollar at 12:30 on Tuesday. Now expecting again for the RBA to try and talk the currency down and not to have any sort of a hawkish tone on monetary policy, if anything fairly neutral. I think we'll be looking for this to fall again. Prices to get into this is going to be not far off from where it is at the moment. As you can see, we're quite near the top of that trading range. Could possibly still get some profit taking running through into next week on the US dollar, and we could see this rally up to 8.8. This is going to be the price that I'm really going to be looking to take sales with conviction. We've got, don't forget, we've still got the price that the RBA wants to see this trading between, which is 80 to 85 cents to the dollar. So we've still got quite a way to fall to reach that price. It was getting close to that last week when it fall down. The week before when it came down to 8.550, which is maybe where it started to have a bit of a push up there. So we've got to look at that as a bearish trend, and the monetary policy is going to sort of dictate to that to us on Tuesday. Again, it might be worth waiting until after that monetary policy just to see what happens. We've also got RBA Governor Stevens speaks at 8:25 as well on Tuesday, which will shed some more light onto it. So Tuesday, a big day for the Aussie. Overall, I'm looking for a bearish trend, but not ruling out the possibility for a spike through to 8.8. Okay, the next one we're going to look at is the US dollar, Japanese yen, and probably the final one that I'm going to be looking to trade next week. We've had the Bank of Japan announced that they were going to try and push back the sales tax hike, which caused a little bit of a pullback in the rally on the US dollar to the Japanese yen. Let's not forget that the divergence between the two banks there is still suggesting that the US dollar will rally against the yen, and some analysts indicating prices as high as 121. So quite a far way away. I'm not ruling out a big pullback on this though at the moment, as maybe profit taking continues, and also with the danger of a quick snap vote. A snap election, we could well get a little bit of strength come through in the yen, which will pull back. Initially, I'm going to be looking for prices of 11565, which is only a little bit further fall from where it is at the moment and coincides with this sort of area of resistance and support. But I wouldn't rule out further pullbacks to 114, and if things do sort of favour strength to the Japanese yen over the coming week, then we could well even see fallbacks back down to that 11,000 level. Okay, so we need to be aware of that, and just be prepared that we could have to take a couple of testing trades on the way down there, and these will be the levels to test those prices at, and then and possibly wait for a further pullback and then take some buys right at the bottom there. Okay, thanks for watching. Hope you can make some pips off the information that we've gone through this week, and I'll catch you again. Bye for now.